Alibaba surged almost 37% today, wiping off all of those losses that people had as the stock declined under $100 per share over the last few trading days. But the question is this really good news? I'm not so convinced, and that's what I'm going to talk about in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys, and let's get right into it. As you can see, Alibaba is up 37% on the day, up $28. And essentially what that did was it wiped out all the losses that it seen over the last couple of days. And if you guys can remember, I actually put out a video on the weekend saying how silly it was for being so low, considering that the cash on the balance sheet plus the equity securities was approximately $40 or $50 a share, give or take. So it was nuts that the shares went down even into the 70s. So actually, I'm not surprised that it recovered. In fact, I expected that all along, but it's crazy on how quickly it turned around. And so it just shows you how volatile this market is right now. And so what exactly happened? And so from here, you can see that there were some vague comments about rolling out market-friendly policies in the first quarter that were made by Chinese policymakers. But what I do want to point out is that there was no progress made on the other issues that China is facing, which is the property crisis, rising COVID cases, which I'm going to dive into in further detail, and further lockdowns related to those rising COVID cases. And then one other thing that nobody's talking about right now, and I'm racking my brain as to why nobody's mentioning this, is China actually stopped its property tax pilot programs, which means that its provinces are just going to be further indebted, which means that they're going to have to request more and more funds from the central government, who has already committed to pushing more and more funds out to support that 5% plus GDP growth that they're aiming for this year. So essentially what I'm saying is not a lot of things good came out, and the stock still shot up. So let's go into this in more detail. So as you can see, Liu He, an economic official, said that the Chinese government is going to boost the economy in the first quarter, and he spoke about policies that were favorable to the market. He indicated that Beijing is expected to wrap up its regulatory drive related to China's internet platforms and make policies transparent and clear. Now, guys, I'll be very honest with you here. This is nothing new. I talked about this back in December on this channel, where China laid out their guidelines on what their policies were going to be for the internet industry. They weren't hampering growth in any area. They were just making it sure that nobody practiced in any sort of monopolistic way. I may have misunderstood that. Let me know in the comments if I have misunderstood that. But from the wording that I read from the Chinese government, which you can see as I put in the previous videos, it really just said they want a healthy and growing internet sector. They did not say that they were going to further clamp down on any company. And so all I'm seeing here is a reiteration of what they already said in December. Now, moving on, you can see in this article that they did mention that the Chinese regulators or the Chinese government was light on specifics, but these comments were enough to send the stocks up on a tear. And I think what's happening here is investors are looking for any news to soar these stocks upwards, even if it's news that's not really new. And I think what they're getting at here is that the comments are allegedly marking an important reset in terms of demonstrating that policymakers still care about the market after a turbulent year that left some investors wondering if China was still investable. Now, that whole jump was just that news, and that doesn't really give me much reprieve, and here's why. There's still huge risks in the Chinese economy. Look, I'm a big Alibaba investor. I do have around 12 or 13% of my portfolio in Alibaba. Over this year, that percentage will come down as I deposit more into the portfolio, but that's kind of where I'm sitting at right now. That being said, I always talk about diversification. The reason why I talk about diversification is this next slide that you're going to see right here. You can see that we are not out of the woods yet here. So I made you guys a nice little picture because sometimes people like to learn with pictures, I guess. But look, we still have an ongoing property crisis, okay? And I'm going to dive further into that. We also have a Chinese consumer slowdown, which I've talked about over and over again, and Alibaba has even mentioned on their conference calls and in their Q3 report that there's a general consumer slowdown happening. And I explained to you why it's happening, because there's just a lot of people that are unemployed or underemployed right now in China. Finally, their zero COVID policies are finally catching up to them as the Omicron variant is now spreading. It's highly infectious, And so it's spreading faster than what they've seen in China before. And here's the problem. They have come out and stated that their vaccines are not as effective against the Omicron variant. So something to be worried about there. And I'll dive into that a little bit more in this video. So moving on to the COVID issues, you can see that China has just admitted that the COVID-19 situation is now grim and complex. They've had 5,000 reported cases on Tuesday, which was the biggest number in over 2 years. Now, by the way, let's just keep this into perspective. 5,000 cases for a country of over 1 billion people is still nothing. So when they say it's grave and complex, we have to take that from a relative perspective. It's not a huge part of their population that is testing positive, but not everybody is testing every day. So obviously they're going to step up testing measures once they see this surge. And now what they're saying is that the COVID-19 epidemic situation in China is grim and complex, making it more difficult to prevent and control. Out of the 31 provinces, 28 has reported coronavirus cases since the past week. And so overall, they're saying that the affected provinces and cities are dealing with this issue in an orderly and favorable way, and thus the overall impact is relatively under control. Now moving on, of the 5,000 people that tested positive, it was actually, as you can see here, 5154. A big portion of them were actually considered silent carriers. So 1,650 of them were silent carriers. And that's really just their term for asymptomatic positive cases, which we saw a lot of here. And the infections have surged significantly in the first time in 2 years since the pandemic began. And so you can see the province that was the most impacted was the Jilin province. Guys, correct me about my pronunciation in the comments below. I really like to get the pronunciation right. And so this province of 21 million people, the whole region has been placed under lockdown. So of course you guys know what that means. That means factories and workplaces, restaurants, everything is going back under lockdown, which means that we're just going to have further supply chain issues. And so they're saying right here that this is a severe and complicated situation, and they will be taking emergency unconventional measures. So we're back to the early 2020 situation here. Now, several cities, including Shanghai and Shenzhen, have imposed strict lockdowns, forcing local and international manufacturing companies to shut their businesses as part of the measures to contain the virus spread. They also built 5 makeshift hospitals in Changchun and the Jilin province with a capacity of 23,000 beds. Around 7,000 soldiers have been mobilized to assist with antivirus measures, while 1,200 retired soldiers have volunteered to work in quarantine and test sites, according to this report. And finally, this comes across as a failure, and so several officials were fired over their failure during the fresh virus outbreak. But what does that really tell me? Look, at the end of the day, if you're going to fire officials for a COVID outbreak, what do you think the other officials for neighboring counties, neighboring provinces, or anyone in China in general is going to do? They're going to overreach in terms of their lockdown efforts because they don't want to lose their job. So what does this really mean? This means zero COVID longer. And so, of course, that's going to cause further supply issues, but it's also going to exacerbate the economic issues on the Chinese consumer as well. So I think 2020 is going to be a very bumpy ride for China as a whole. And so from here, you can see that already news reports are saying that China COVID lockdowns are set to further disrupt global supply chains because closing factories and stopping truck traffic is already going to impact those supply chains that are already weak as a whole. So we're now getting back to those issues. So how is that really going to impact us in North America? Of course, with our investments in China, we are going to see those impacts once again. I really think Alibaba could potentially have a bad Q4. I really do think so, as a result of everyone going into further lockdowns again. That being said, I also think North American companies are now going to get strained further because if you have further supply constraints, it's just going to push inflation up in North America for North American products. So I think this is not a good sign overall. So the fact that Alibaba did run up today and all Chinese stocks ran up and overall the market was up, I think that it's masking the real risk and the real bad news that came out today. When this news came out and I woke up this morning, I thought the market was going to be in a bloodbath, but it was very interesting how it ran up. So it's interesting how they're focusing on one piece of the news and they're not focusing on the other. Now, I might be mistaken. Once again, I try not to be right on this channel. I'm just trying to follow the truth. So if I'm missing something about this, let me know in the comments. Now, moving on, Sinovac Biotech, the world's largest COVID-19 vaccine maker, has battled concerns that its COVID vaccine has waned in efficacy against the highly transmittable variant Omicron. Its Omicron-specific booster may only be ready for widespread distribution in May. So we're in March right now, and we're in mid-March. So are you saying that we're at least going to have a month and a half of this vaccine not available, and so people are going to go into massive lockdowns? Because if that's the case, we're in for some real trouble here, in my opinion. And mind you, this particular article about Sinovac is a little bit old. It came out in February, so if there's any updates, guys, let me know in the comments and I'll blast out the updates. But as you can see, moving forward, Tesla has even halted work at their Shanghai factory for 2 days amid the curbs notice. So everyone's stopping right now. And so that's not the only issue impacting China right now. One of the other issues that I mentioned in that 4-part property series is that a big issue with the property market is the embedded or built-in or policy-related issue, which is that the local governments get the majority of their taxation revenues from land lease sales. And so in order to resolve that, they have to introduce a property tax. They don't have a property tax for the majority of properties in China. And so they need to do that. And they started running trials in 2022, which was a great indicator that they're resolving the issue. Well, now here's the problem. China will not expand its property tax trial this year. And the reason why they're not expanding the property tax trial is that the housing market slump and growing pressure on China from a renewed virus outbreak and geopolitical turmoil is too much to allow them to enter into these property tax trials. And as you can see here, some cities have carried out investigations on the tax trial after the country's top legislative body approved the reform plan. So we're taking some steps back here. And of course, what does this mean? Well, if you guys remember, the Chinese provinces are actually cash strapped right now because the property market is slowing down, and so they're not generating as much revenue by selling land leases while they're still having their infrastructure plans and, people's salaries to pay and government employees to keep on staff. And so where are they going to bridge the gap of that funding gap? Well, obviously they're going to go to the federal government. Here's the problem, and this next article really talks about that. China's federal fiscal aid for their provinces is little comfort. And the reason for that is because although there's a common plea for President Xi's government that the provinces need more money, here's the problem. The local government's finances are significantly overwhelmed by the heavy load of spending required. Slowing economic growth and the weakest property market in half a decade are snapping the flow of cash into the local coffers, just as cities and provinces face a record $440 billion of bond payments coming due this year. So the only way to bridge the gap between what's coming in and what's going out is with more borrowing and more money being sent from the federal government, i.e. Beijing. So the difficulties faced by local governments are actually unprecedented this year. And so without more money from the central government, less developed regions may even have problems paying salaries to government employees and public school teachers. And so we're really running into a liquidity crisis caused by the property de facto bubble that we're seeing here. And so things aren't great. And so that's really what I'm trying to point out here, and what I've been trying to point out for a while. Now, do I believe in the long-term story for China? Absolutely I do. But do I believe in a rough 2022 and possibly a rough 2023 and 2024? Yeah, there could be. And so we do need to take that into consideration. Now, the federal government did come in. There was a premier that said that a record 9.8 trillion won would be transferred to local governments this year, which is up 18% from 2021. So that's a good thing. Transfer payments will be equivalent of 85% of the income provinces will generate on their own this year. So that's a huge boost. But here's the problem. It comes in one hand, but it gets taken by the other. And this is what I mean. Nationwide tax relief of around 2.5 trillion won, which was stipulated by the federal government, which is more than double the size of the last year, much of that money will come from local budgets, which are already stretched. So the federal government is giving 9.8 trillion won, but the federal government is also saying that they're going to be doing a nationwide tax policy, which is not going to be paid for at the federal government level. It's going to be paid by the local governments who are already asking for more money. So we're running into a situation here where if those local governments are already strained and that 9.8 trillion won was just to get them afloat, well, that 2.5 trillion puts them right back down. So we'll see how that plays out. And so there really is a big issue here, and that's what I'm trying to point out for you guys. And so a little bit of background for you guys. So land is a significant resource for China's cash-strapped local authorities, with the revenue from sales tripling over the past 10 years as governments sold long-term rights to use state land for homes, industrial parks, and shopping centers. They really got accustomed to that money coming in. Now here's the problem. As land sales or land lease sales have gone down, something interesting, and I need to follow up more on this, is look at this next line. Some governments are now even effectively selling land to themselves to boost their finances. I need to learn more about this because this could be a real huge problem. If you're taking from one pocket to put in the other, eventually the cards are going to come collapsing. And so I need to do a little bit more work of looking into this. And with respect to the debt issue, local authorities have also been stepping up their borrowings via bonds, especially to finance infrastructure investment. By the end of 2020, outstanding local government bonds equaled 94% of total income. And that's just under that 100% level that China has officially set as a risk alarm line. Now, the burden was heaviest in the northern port city of Tianjin. And if you remember, Tianjin is where they've had massive lockdowns, or at least I believe that they had massive lockdowns. And so it's more than double their income, followed by Guizhou in the southwest of China and Inner Mongolia in the north. And essentially what we're seeing here is that these provinces as a whole are getting close to that impact threshold for the government to slap controls on spending. So there could be more issues that fall from here that I'm just not seeing, but I'm really doing my best to sort of understand this as time goes on. And repayment pressures are also growing, with regional authorities spending almost 1 trillion won paying interest last year and another 2.7 trillion won repaying bond principal, which is more than 15 times the amount in 2015. More challenges as a result lie ahead, with 9.4 trillion won of bonds maturing over the next 3 years. So now we are seeing a potential of a liquidity crisis where the federal government is going to have to step in. And you can see most Chinese municipal level governments are already running a fiscal deficit. And so overall, guys, I'm not looking to poop on your parade here. All I'm saying, and back to this PDF that I made for you guys, is there are some real issues in China. The regulatory issues over the internet companies is the least of my concerns. My biggest concerns over the Chinese economy are the ongoing property crisis and the related debt issues that I just went over with you, the general consumer slowdown, and the zero COVID policies, which I think are going to get further enacted now that they fired officials for the 5,000 people surge of COVID cases. So I think this gets worse before it gets better. So pay attention. And also, as I've been saying from the beginning of time, focus on diversification. And also, guys, I think it's very important that you understand the property crisis that's happening in China. I made a 4-part series on this crisis that I actually released twice on the channel because I believe it's that important. To get to the first episode of that series, click right here.